Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, Xi Jinping uses New Year message to sound warning to Taiwan, as well as that central banks poised for rate cuts in 2024. Investors and economists do predict. Now, Israel's war in Gaza will also go on for months, warns Netanyahu. But we've got lots to talk about on the charts. Also, with lots happening on the economic calendar, we'll come to that near the end, so make sure you stay around till you see that. Before we get straight into it, make sure you subscribe. But the first article, of course, to talk about is Xi Jinping and the situation with Taiwan. Now, Xi used his annual New Year address to warn Taiwan ahead of their presidential election, with Xi saying in a televised speech that the reunification of Taiwan and China was a historical inevitability, with both sides of the strait needing the glory of reunification. Now, we've largely been talking about China in terms of its situation in relation to the economy, with, of course, China struggling greatly at the moment as a result of the kind of global economic slowdown, which we've seen with falling demand from the consumer side as a result of those kind of increased interest rates domestically. And this has largely been damaging for a country like China, which exports, and that's what kind of makes up their economy, is exporting these goods which they manufacture. And if they're no longer able to do this, it obviously damages China's economy, and as a result we do see that economic slowdown, which is quite unusual for a developing and fast growing economy like China's. Now, this has also had effects on other sectors of the Chinese economy, and as we do know, the Chinese property sector has also had great issues recently, with kind of developers defaulting, decreased kind of consumer confidence, let's say, and just because of how the housing market is kind of the underpinning financial vehicle for most consumers for investment. That kind of decline, that kind of issue within the housing market is causing great worries within the Chinese public, and increased economic worries for certain. And what's interesting to see now with Xi Jinping talking about Taiwan is obviously we do have two currently raging kind of wars on two important continents, with firstly Russia invading Ukraine, with that sparking great world tensions, a new era of the Cold War, some would say, and changing global supply routes completely. And as we've known, likely it was the Russian invasion into Ukraine which helped push inflation so far to the upside for many Western nations, especially as a result of rising energy prices. And now we're, of course, seeing the continued kind of battle between Israel and Hamas, which is now taking place within the Gaza Strip. And as a result, we have two key raging conflicts, which involve key economic powers. With obviously there being links between the US and Israel, but also the US supplying arms to Ukraine along with other EU and European nations, as well as that, of course, Russia's invasion into Ukraine puts that kind of head-to-head situation between Russia and the USA. And in Israel, we do have, of course, the US supporting Israel, but also there being links between Russia and Hamas as well, with Iran, of course, helping fund Hamas within the Gaza Strip. So as a result, we do have this kind of dangerous geopolitical atmosphere at the moment, where we're not really sure how things may escalate, with obviously there being risks of a regional escalation within Israel or of the surrounding areas of the Middle East. And therefore we kind of worry on that front, but also with Russia and Ukraine, and now hearing increased kind of warnings from Xi Jinping in relation to Taiwan obviously does bring up more risks that may not have previously been accounted for in relation to geopolitics. So this is something that's very important to keep note of. And this comes as geopolitical tensions mount between China and the West, with the US and others concerned over China's interest in nearby disputed territories. And this has largely been noted now in countries further than even Taiwan, with obviously Japan having some very near territories to Taiwan. So obviously that creates some issues between Japan and China, as well as that, of course, the Philippines is becoming more and more kind of aligned with the USA, as issues do mount over the South China Sea, with the US and others concerned over China's interests. Now, China has not ruled out using force if Taipei refuses unification indefinitely. Worries are mounting after Xi denounced the frontrunner in Taiwan's presidential race as a separatist, and obviously that meaning, he's kind of commenting and denouncing that leader as someone which is opposed to the reunification, and therefore, this kind of creates a situation where Xi Jinping may use this to justify his kind of attack on Taiwan, which would obviously bring about greater conflict than we're already seeing in the world. Xi's speech comes as China's economy continues to stall following long gone lockdowns. Now, China's economic planners are heading into 2024, fighting a liquidity crisis in the housing market, whilst also dealing with high local government debt and weak economic confidence. Despite this, Xi said the economy had sustained momentum of recovery, whilst acknowledging there had been headwinds. And so this is quite interesting rhetoric to be hearing from Xi, who is now, accepting these issues which the Chinese economy is facing. But Xi did make technological self-sufficiency a priority in response to trade issues with the USA, as we do know, with Joe Biden introducing certain sanctions, or at least certain kind of bans on exports to China in relation to certain technologies, as well as that, of course, US businesses are now expanding their horizons in relation to their manufacturing in East Asia, with Vietnam, of course, being one that's very much coming into the Western, or at least the US's lens at the moment. Now, that's all to talk about on this article. Keep your eyes on this, as world tensions will be highly influencing assets such as gold. So, of course, this is very important to stay on top of, as well as that we're obviously allowing ourselves to understand more about the Chinese economy. So keep your eyes on this. Next to talk about, though, is central banks. Now, leading central banks are expected to start cutting rates over 2024, according to investors. And this comes as economists become more sure that prices are coming under control. Now, before Christmas, when we were, on the topic of central banks, we were largely commenting on, this exact fact, where many individuals, many institutions, financial firms were starting to change their perspective on the leading central banks, as it had been kind of in the lead up to the end of 2023. Expectations were there for the belief that basically central banks weren't done with their rate hiking cycle, that maybe there was another 0.25% percentage points increase still in the barrel for the end of the year, and that rates were definitely going to stay high and for quite some time. However, as we've kind of ended off this year now, we have seen that with the falling inflation rates, which was falling greater than previously expected, we have seen investors kind of change that perspective into one that's more so, dovish, one that's more so expecting rate cuts actually very, very soon, as we now do begin the year of 2024. And so this is something that's very interesting to note, of course, and will be interesting to follow as we do go into this year. We entered 2023 during a period of aggressive rate hikes, but as seen in Q3 and Q4 of 2023, the Fed, ECB and Bank of England have put their tightening programs on hold. Now, headline inflation rates are falling in most G7 nations and economies are slowing. And this has been seen in, the ECB, for example, with their declining manufacturing sector as a result of these higher interest rates. We've seen this in the UK as well, where, GDP has fallen flat. Less so in the US. This has kind of been more of like a bright spot in the global economy, but we are now seeing that kind of slowdown that was expected. So as a result, we are now seeing, increasing kind of kind of hints towards there being rate cuts soon, as this is the kind of economic situation which might trigger rate cuts by a central bank. Now, investors currently expect the Fed to start cutting rates in March, with 0.25 cuts to follow during the year. So 5 of those 0.25 percentage rate cuts throughout 2024. Investors obviously expecting that for the Fed. However, the ECB is expected to cut rates 6 times in 2024, beginning March, with the Bank of England also expected to cut rates 6 times in 2024, beginning in May. So, we do have kind of this kind of timeline or expected timeline of where we will see interest rate cuts going into 2024, but it does seem that the Fed and ECBs will be the ones to cut rates first, with the Bank of England obviously lagging behind. And as we've previously spoken about, Bank of England first rate cut projections even go back so far as July. So we do have quite a bit more time probably with the Bank of England having interest rates very high. Now, this change in expectations allowed for a US equities rally nearing the end of the year, and this move was propelled by the Fed's projections for rates to be cut 0.75 percentage points over 12 months. Now, the ECB and Bank of England, however, have had more hawkish rhetoric, indicating speculation over rate cuts was too soon and the fight against inflation was not yet over. And that was something that was definitely reaffirmed by Andrew Bailey in their last meeting with the Bank of England. Despite that, Eurozone inflation slowed to 2.4% in November, which is not far from the ECB's 2% target. So very important data there, with the Bank of England also seeing an inflation drop, falling 3.9% in November, down from 11%. So important data to note, of course. Lastly, to talk about and quickly is Israel's war in Gaza, which of course is important to comment on as it is affecting global tensions greatly, as we commented on at the start. Now, Netanyahu has warned that Israel's campaign in Gaza will continue for months, with this quashing hopes for a swift end to the bloodiest war with Israel in 75 years. Now, this obviously began following the October the 7th terrorist attack by Hamas. Israel, as a result, has now carried out a land, air and sea operation for nearly 3 months in Gaza, with a reported near 20,000 Palestinians killed. Now, 1,200 people were killed during the Hamas attack on October the 7th, which made it the deadliest loss of life on the country's soil since 1948, with about 240 hostages also being taken. Now, Israel has rejected international pressure for a truce, which would allow aid to flow in. Now, obviously, we have already seen truces take place within Israel, within Gaza, with the exchange of prisoners for hostages, and that sort of thing, with aid also being supplied to civilians in Gaza. But we are seeing increased calls by certain families for a ceasefire, but also certain calls against those exact truces to be made within Israel. Now, this obviously would allow for the potential exchange of the remaining hostages held by Hamas. Now, the US is continuing to supply Israel with weapons, including an emergency $147.5 million of more than 100,000 artillery shells, plus fuses and primers for howitzers. So, artillery weaponry right there that would be supplied to Israel. In his address at the weekend, Netanyahu referred back to the fact that Israel was increasingly isolated on the world stage, but retained US backing. As we do know, these are two key allies for one another. The longer the conflict does continue, however, the greater the effects on the Middle East, with Hezbollah clashing on the border of Lebanon and Israel, with the IDF, with each clash increasing the risk of regional war, which we've obviously covered before, but will create great adverse effects on the international oil market, and likely spark up greater war within the region, as of course regional war does connote. So that's all to talk about on this article. Definitely keep your eyes on this as the humanitarian cost does grow, but also the risk on on a regional war does increase world tensions, of course, and also does add and affect different assets within the market, such as oil or gold. So keep your eyes on that. That's all to talk about in the articles, though. Next to talk about is the charts, of course. Where to begin, we do have US indices. Now, US indices obviously now have ended off the year on a high point, and this is following, of course, the downward moves that we did see with the aggressive rate hikes at the start of the year. And now we have on the US 30, for example, broken above the previous highs that were ever made on the US 30. So we are in very bullish territory at the moment. We did kind of reconnect and retrace down to that previous high level around the 38.2. However, it wasn't exact, but it is kind of good enough for us to note, prices retraced to that point, but we are sitting at new highs at the moment. But as well as that, we're kind of stalling out. We did end off last week in a kind of stalling manner, and we are likely to see maybe a stall going into this first week of 2024, just as a result of kind of people going back into work. People maybe not so keen to enter trades as well, certain financial institutions, and quite possibly even certain banks and hedge funds may still be selling off their assets to end off the year. So keep your eyes on the US 30 most definitely. Next to talk about, though, is the dollar, which is in a very interesting position because we are currently experiencing a bullish retracement. Now, if we were to draw out the Fibonacci kind of retracement line, we are currently sitting at that 38.2% Fibonacci level. That said, we're not seeing too much liquidity around there, but it is important to note these Fibonacci retracement levels when we do see them. And of course, as we have been seeing with the dollar, continually moving to the downside, since we did see that change in rhetoric from the Fed, going from that more kind of hawkish rhetoric to that more dovish rhetoric, we did see the sell-off to the dollar, and we have seen this kind of push to the downside. But this doesn't rule out retracements, and we of course do have the chance of not only price continuing a move down from 38.2%, but also the 50% and 61%, with the 61.80 probably having the greatest probability, just as a result of it having that key liquidity level just there. So keep your eyes on this, as the dollar is in a very interesting spot. Next to talk about, though, is Euro USD. So still on the topic of the dollar, but we are seeing price now near this key liquidity level that we do note along here, where we have seen before a double top form. And as we do know, these areas of resistance do often then end up serving as an area of key support. And so we do have a high probability, kind of likelihood that price does interact with that level and move to the upside. So this is definitely a level to note, and a very interesting level indeed. So definitely keep your eyes on this level. If we draw out the the kind of Fibonacci retracement tool, price has already kind of tapped this 27.2% Fibonacci extension level, and now price is nearing the 50%, which is sitting in that liquidity zone. So definitely we're in an interesting area, and I think it will be interesting to see whether price now does interact with that 50% and liquidity level and make a move to the upside. So that's something to note, of course. Next to talk about, though, is pound yen. Not too much to note on pound yen at the moment as well, but price is continuing to range. We are continuing to form these interesting levels of price. We kind of have a kind of a weak level of a support around there, but definitely keep your eyes on pound yen as price does shape up interestingly. Next to talk about is Bitcoin, which like pound yen is ranging about, Bitcoin after its like crazy rally that we did see. I think it was around the start of December, end of November. Price has kind of stalled out at these kind of recent highs, and we haven't seen any significant moves since then. But definitely keep your eyes on Bitcoin as it's in a kind of very interesting spot where we could see a sell-off. But obviously, Bitcoin is highly reactive at the moment to the Fed's rhetoric. So that's an important thing to note in relation to Bitcoin. Next to talk about though is gold, which did break through this key area of liquidity and resistance around the 2040 level most recently, and did make a significant move to the upside following that. Since then, we did see a kind of stall out at around the $20.90 an ounce level, and from there we are now retracing to the downside. Price is a little cleaner to look at on the 1 hour, I think, at the moment on gold, just as a result of this kind of changing volatility, but definitely the 38.20 level is very key to note at the moment, as it is lining up with that previous area of resistance on the charts and liquidity. So I think, if there was any area for price to come down to, retrace to, and continue to the upside, it would be that 38.20, where we do know there was lots of sell orders previously, and therefore will be likely lots of buy orders. That's all to talk about on gold. Lastly, to talk about on the charts is oil, which is now nearing a breakthrough on this key liquidity level and key kind of resistance level. So it was acting as support most recently, but if we do break through, we do have kind of open push to the downside to maybe reach these previous lows. So definitely keep your eyes on price at the moment. It's in a very interesting spot, most definitely. So yeah, keep your eyes on this one. That's all to talk about on the chart. So finally to talk about, of course, is the economic calendar, which we'll have to get through quick because this video is kind of coming out quite long. But firstly, we will be getting German unemployment data and inflation rate figure, as well as that we'll be getting US manufacturing data. So listen out for both those pieces of data. Along with that, the FOMC minutes will also be released. Along with that, French inflation rate figure and Eurozone inflation rate figure. So two key inflation rate figures right there. Along with that, Italian inflation rate figure will be released. So lots of European inflation rate figures to listen out for, as this will be influencing and shaping up kind of the outlook for the ECB going into 2024. As well as that, we will be getting Canadian unemployment figure, as well as, of course, the US NFP figure. So a very key figure to end off the week, but lots of inflation data being released as well this week. So lots of data to listen out for, lots of things on the charts to look out for as well. And as we've covered on the articles, there's lots happening in the world. So keep your eyes on all of this. Hope you have a great trading week and a happy new year to you. Obviously, the markets might be a bit quieter going into this week, but I hope you have a great Christmas last week, and now you're going to have a great new year. Good luck to you all, and have a great trading week. See you later.